Tomorrow, as well as being with you throughout the convention.
The tech index gains almost 104 points, while the Dow closes up 10. Then, looking for a play in the commodities marketplace? Well, you might want to consider coffee and cocoa. We'll tell you why.
Nightly Business Report is brought to you by Compact, makers of compact non-stop e-business solutions for companies who know that the online world never stops, so their information systems can't stop either. Compact, non-stop. Franklin Templeton, serving investors for over 50 years. Franklin Templeton and Mutual Series, investment products distributed by investment professionals. A.G. Edwards, whose financial consultants serve investors and businesses nationwide. A.G. Edwards, trusted advice, exceptional service. And is produced in association with Bridge, the global financial information company, providing real-time and historical market data, analysis, and news.
Good evening, everyone. Technology shares were on the rebound today after last week's steep sell-off. The Nasdaq rallied nearly 104 points and the Dow gained about 10 as bargain hunters returned to the market. But two utility names bucked the trend, falling sharply after announcing a $7 billion merger of equals. Suzanne Pratt takes a closer look at the pairing of FPL Group and Entergy.
The union of FPL Group and Entergy creates a utility powerhouse, what would be the largest electric company in the U.S. The new company, which has not yet been named, would serve more than 6 million customers in 5 southern states and have a huge generating capacity of 48,000 megawatts. Chief executives of both companies describe the pairing as a logical fit, one that should be easy to execute.
We have exactly the same strategies. We have a core business strategy built around building new power plants, clean power plants with the two of the top 3 cleanest utilities in the entire country.
Because it's a merger of equals, we have people from both companies feeling that this is exciting. They're a member of a new team instead of, gosh, I've been taken over by somebody.
Many industry analysts applauded the union.
This does position them to be one of the surviving companies, to be one of the biggest players. It gives them, the right mix of assets to produce some earnings growth and capitalize on some of the supply shortages we have out there.
Despite analysts' enthusiasm for the merger, investors were less than thrilled. Shares of both FPL and Entergy fell today on the news. Analysts attribute the stock's weakness to a general dislike in the utility industry for mergers of equals and the small premiums that usually come with them. In addition, analysts say investors may be reacting to the long and drawn-out process of approving a utility merger.
It'll take at least 15 months for this merger to get done, and so I don't want to say it's dead money per se, but clearly it's 15 months of getting through a regulatory process, which at times can be uncertain, especially in places like Louisiana and Florida.
As part of the deal, FPL and Entergy will be buying back about $1 billion worth of their shares over the next several months. Analysts say that will help support the stock, not to mention boost earnings, all while the companies seek regulatory approval. Suzanne Pratt, Nightly Business Report, New York.
Also making merger news today, a mega deal between the owner of London Financial Times and the largest processor of student assessment tests in the United States. British media group Pearson's PLC is buying National Computer Systems for $2.5 billion in cash to create an education services powerhouse. Shares of National Computer Systems soared on the news, rising 13 3/4 points, or 23.5%, to 71 7/8. Pearson isn't traded in the U.S.
Those rather sizable mergers were somewhat constructive early today in helping Wall Street dig out from last week's bomb blasting by the bears, but buyers were quite cautious and seemed to be waiting for the other guy to make the first move. After moving in a narrow range for the first 90 minutes of trading, buyers became bolder by 11 a.m. when the Dow Industrial Average recouped 73.5 points of last week's 222-point loss, while the NASDAQ index posted a 54.25-point gain after tumbling 431 points last week. Some brokerage upgrades in recently weak tech stocks like Texas Instruments kept the early upturn intact for the rest of the morning and into mid-session, enabling the Dow to post an 85-point gain at 1:30 p.m. when the NASDAQ index was up 83 points. For the rest of the day, the blue chips lost considerable ground while NASDAQ added to its gains. The Dow Jones Industrial Average salvaged a closing gain of only 10.81 points, putting it at 10,521.98. And for the month of July, it rose 74.09 points. In today's 105-point trading range, the Dow closed down about 81.5 points from the best level of the session. The Nasdaq Composite Index bounced back, gaining 103.99 at 3766.99. And in its 152-point trading range, the composite index settled just a touch below its best level of the day. Big board volume, dropped about 45 million shares from Friday's pace, about a 5-4 margin of up volume over down volume. Dow Transport Index up 88.5 points. Oil dropped and the airlines took off. Utility Index, though, down 2.79. The closing tick fairly bullish at plus 444. Standard & Poor's 500 up nearly 11, 6.5-point gain of the 100. The mid-cap 400 up nearly 6.25. Bridge Futures Price Index fell almost a point. New York Stock Exchange Composite, nearly a 1.5-point rise over a 5-point jump in the value line. Russell 2000 small cap up almost 10.5 points. Wilshire 5000 up just about 134 points. The bond market had a hard time getting out of its own way today as investors were loath to make any strong commitments ahead of Friday's July employment report, especially in the absence of any other major economic reports. A sizable 75-cent per barrel decline in New York September oil futures was supportive, but the solid rally in the Nasdaq stock market kept flight to safety buying away from bonds. Tax-free and corporates ended mostly unchanged, and treasuries closed narrowly mixed. And we'll see the 5-year note, no change at all. The 10-year note up 1/32. The 30-year bond rising or falling 5/32. There's your mixture, along with the 2-point drop in the Lehman long-term Treasury bond index. I'll be back shortly to show you where the action was on Wall Street today. Linda?
As the second quarter earnings season winds down, the focus for financial markets is now squarely on the Federal Reserve's next move on interest rates. And here to talk about what clues to look for is Hugh Johnson, Chief Investment Officer of First Albany. Welcome to Nightly Business Report.
Thanks, Linda. Nice to be here.
Well, Hugh, that was quite a pummeling markets took last week, especially following that GDP report. What do you make of the markets and the comeback today?
Well, the markets looked at the GDP report and saw the 5.2% economic growth and said that's too strong. Federal Reserve is going to have to raise short-term interest rates when they meet on August 22nd to slow the economy down. But if you take a little bit closer look at the report, which we had 2 days to do.
So that's what's happening today.
Absolutely. And we noticed that, first of all, consumer spending, which the Fed was really worried about, did slow from a 7% pace to a 3% pace. And spending on technology, business investment to enhance productivity, accelerated at about a 20% pace. So you really, if you look at the report, you had the right combination. Slow down in consumer spending, spending by businesses on technology to improve productivity and therefore to keep inflation low. This is really a great report.
So the right kind of spending, in other words.
Yeah, the right kind of spending. And as soon as we saw that, and it took us a couple of days over the weekend to do that, everybody said, hey, wait. No reason to get too bearish, no reason to worry about the Federal Reserve raising short-term interest rates. Maybe we have to worry about it, but not as intensely as we did last Friday.
So what do you think is going to happen on August 22nd when the Federal Reserve Open Market
Hard to say, quite frankly. They don't know, I don't know, but I think we'll get a good clue when we take a look at the employment report this Friday. And what you really hope for is the growth in private sector jobs of something less than 200,000. If it's less than 200,000 private sector jobs, then you're going to say to yourself, I think I will conclude that the Fed will keep policy on hold. I think they're going to keep policy on hold. I think the markets are sending us that message. If we look at short-term interest rates and the Fed funds rate future, you don't know for sure. Let's look at that employment report.
So Friday is a key factor, then.
Friday is absolutely crucial in my judgment.
Why have the technology stocks taken such a beating? Is it earnings? Is it overdone?
Well, it starts with earnings and then the relation of price to earnings, quite frankly. The technology sector is pricey, overvalued, and frankly, they came down so hard last week that it was nice to see them come down to levels that make more sense.
Do you see some bargains here? Would you be a buyer?
I would be a buyer of technology. Always do things, in moderation, but you take a look at some of the large cap companies, they really came down to levels that I haven't seen in a long time and start to make sense. Companies like Cisco, Sun Microsystems, Oracle, to some extent Texas Instruments has come down to a level that really looks, let's not call them cheap, but cheaper and making a little bit more sense from a value point of view.
And what about outside the technology area?
You got to hedge yourself a little bit, Linda. This is a market that's very volatile, and I think you have to buy something that looks a little defensive. Look at consumer non-cyclicals, companies like Safeway, which is a food retailer, Pepsi, which is a beverage company. Those are really safe places to be. Look at the drug area. The drug stocks are usually a safe place to be when there's a lot of worry about the economy slowing and earnings slowing.
Very briefly, with the Republican committee, the convention starting this week, what impact will the elections have on
Wall
markets
Street
going
likes
forward?
Republicans. A lot of rhetoric about too much government. We want less government. That'll be coming out of the Republican Party. Wall Street likes it. It should give it a positive bias to the market. The Wall Street seems to like Republicans, and they certainly like less regulation, less involvement of big government.
Okay, we'll have to leave it there. Thank you so much. And we have been speaking with Hugh Johnson, who is Chief Investment Officer of First Albany.
Speaking of Wall Street, the stock quotes on Nightly Business Report will look a little different tomorrow. That's because we're going to start quoting share prices in decimals instead of fractions. Erica Miller explains why.
Even before the NYSE and the NASDAQ take the plunge, Nightly Business Report plans to begin quoting stock prices in decimals, or dollars and cents. Starting